On Hot Picks today, we're checking out three small caps. Our guest has Acadian Asset Management as his top selection. It's a quantitative investment manager. We're joined by Nathan Moser, Senior Portfolio Manager at Impax Asset Management. Thanks very much indeed for joining us, Nathan. Before we get into your ideas here, I'm just looking at the Russell 2000 versus the S&P 500. And obviously over 5 years, the big cap index has been well ahead, but certainly not this year. The Russell is up about 7% this year, whereas the S&P 500 is pretty flat.
Yeah. Good morning. Thank you for having me. We are seeing a better start for small caps this year. It's been an even longer run than you suggested in terms of small cap underperformance, really going back more than a decade. And as a result, the asset class just got too cheap relative to large cap. and excuse me. And we expect that this reversion trade that you're seeing so far to start this year really has some legs to it.
Mm-hmm. And why is that? Just simply people, well, they've made a lot of money on these big US big cap techs in particular. I think people are worried about the capex being overdone in the sector.
Well, that's definitely a concern in markets. There's the chance that as capex gets pulled back, that you start to see some folks wonder about what's next. Really, the issue is you have extreme concentration in the largest companies in the S&P 500. Valuations and expectations have gotten to levels that we think are ripe for some reversion to the mean. And so that money, in our view, doesn't necessarily have to leave the market. We think it just moves down market cap. It moves to non-US regions. And so that's what we're seeing. Maybe one last point about why we're so positive on small caps. When we look at the relative valuation of small versus large, we're back to levels we haven't seen since the late 1990s. So we're effectively at 25-year lows. And so there's lots of runway for small caps to perform better going forward.
Let's get into your ideas here. Acadian Asset Management, a quantitative money manager, just won a huge mandate from a British player?
Yeah, that's correct. Acadian is a very well-respected quantitative manager, superior investment performance with respect to their strategies. As a result, we're seeing very strong inflows into Acadian. You referenced St. James Place. They just awarded a mandate to Acadian for nearly $17.5 billion US. That's about 10% of the assets under management. So very impressive growth. We think that continues in the future. And investors really aren't paying much for such a high quality business. It trades at about 10 times earnings. We think that's too cheap. And as you see in some of the news today in the asset management space, consolidation is a theme that is taking place. And we think the value of Acadian is materially higher, both on a standalone basis and if they were to pursue selling the entire firm.
What deal are you referring to, sorry, in asset management?
Yeah, so the proposed acquisition of Janus Henderson by Victory Capital.
Yeah.
And again, that's just a proposal. That's not a done deal.
Yeah, thanks for reminding me. Eastern Bank, also based in Boston. What attracts you to this name?
So we like the Boston region just in terms of its economy. Eastern has been around for in excess of 100 years, not that long as a public bank, but very strong community relationships, very strong deposit market share. We are really excited about the company's shift from being acquisitive. They had done several smaller bank deals to essentially saying no deals in the near term and really focusing on driving profitability and returning excess capital to shareholders. So the stock has started to perform better. We think there's more room to run. It trades at a high single-digit multiple of earnings. They do have an activist investor in there that is agitating for them to sell the bank. And while that's not necessarily in our base case, I think it represents the compelling value of Eastern Bank.
And then finally, is it SciBone? They're a medical device company focused on pain, joint fusion in part. So it's spine technology.
Yeah, so it's SciBone, a smaller, very innovative medical device company focused on the lower back, specifically the sacroiliac joints. That really has to do with lower back pain. And what they've done over the last several years has really been impressive. They broadened out the product lineup. They have strong reimbursement. They've been investing heavily in their distribution capabilities. And this is a circumstance where the fundamentals have improved materially, but the stock price has not. And so I think it's giving investors a chance where the market, and while I'm always one to respect the wisdom of the market's a bit short-term focused on this. I think they're missing the long-term value creation that the team at SciBone is creating. At Impax, we're long-term investors. We're not going to focus on the market gyrations. We're going to focus on the destination. And the destination for SciBone is a much more valuable business than is represented today.
Nathan, we'd better leave it there. Thank you very much for joining us. It was great to hear about three names that were news to me. I wasn't familiar with those stocks at all. Nathan Moser, Senior Portfolio Manager at Impax Asset Management.